Hey guys, welcome back. Today I wanted to go over trading Tesla options, and especially how to trade them after they've gone up a lot. As you know, on Wednesday, the stock opened up over $100 because the night before Tesla had announced a 5-for-1 stock split. So, how do you trade Tesla while reducing your risk but also have significant upside? Well, there's actually a way, and this is what I'll go over in this video. Before I continue, please excuse the video and audio. I'm trying to get this out to you guys as quickly as possible so that you have timely information to see how things work. I think the content and what you're going to get out of this is more important than look and feel. And also, quick disclaimer, this channel and video is for information and entertainment purposes only. Please do your own research before taking any trades. So why would we think Tesla could continue to go up? Well, let's look at its history and the history of any stock when you're trying to execute on this trade. Tesla, in the last month, I would say, had a streak where 3 or 4 out of 5 days, the stock was up $100. So if you had just jumped in any one of those days, you probably would have made a significant amount of money. And for stocks like this, with this kind of history, I would advise not to short the stock, even though the share price is up a lot already, and the 5-for-1 stock split, it does not represent any fundamental change in the company or the shares. But despite all of this, Tesla is a momentum stock that can go up in excess of $100 multiple days in a row. So you would have to be very nimble or just avoid shorting. So how do I take advantage of the momentum for something like this? First, you would define the risk reward. And in cases such as this, my risk reward that I prefer to get into is a 1 to 5 risk reward. In this case, you see that the option spread, it's a vertical bull spread option for this week. It has a cost or a net debit of 550 and a max gain of 1950. So that's about a 1 to 5 risk reward. However, 550 is still a lot to risk, especially for smaller accounts or if you want to do multiples of this trade. In order to reduce your at-risk capital, we need to enter into additional trades. But please know that this has to be your first trade. And that's because the price of a spread trade won't fluctuate as much as the share price or individual put and call options. Furthermore, you need this trade to be completed so that you can structure your next couple of trades around it. The next step is to wait and see if Tesla's share price continued to increase. It did in this case, but if it didn't, I would have closed out the spread trade. Since the price of spreads don't fluctuate too much, I would have closed it out for a small loss. I definitely would not hold it overnight to the next day, and I anticipate that the loss would be somewhere between 100 to 250. Lastly, before moving on to the next trade, you'll see that I entered into the 1550, 1575 spread trade at around the time when Tesla was trading around 1505 to 1510. You'll see the next trade was made about an hour later, and out of the 4 trades that I made related to this strategy, I'm probably least happy with this one. If I was a little more patient, I probably would have gotten a better spread range instead of the 1525, 1530 spread. And to go into this in detail, I'm entering into a bear spread. So I'm basically hedging my long spread that I did earlier. In this case, that spread would only pay out if the share price went below 1525. When I took this second trade, Tesla was trading between 1525 and 1530. From there, I would have anticipated at least a $50 move up or down from that point to the end of the day, if not by expiration. Therefore, I think of this second trade as a hedge, even though the spread range is lower. Out of the 4 trades, I would say this second trade is optional, but I took it to reduce my capital at risk. However, I would strongly advise that you do the following 3rd and 4th trades. As I was hoping, there was a bit of FOMO overnight, and Tesla's share price gapped up the next morning on Wednesday. So now the share price was $50 over my initial spread trade of 1550, 1575. So I was in the money. So the first thing I did was to look to see how much I could close the trade out for. As you'll see in the timestamp, I made the initial order to close it out at 22 at about 9:30 when the market opened. I chose that limit price of 22 because it was relatively close to 25, and I couldn't expect to get all 25 until closer to expiration. So after placing that limit order, my next objective was to enter into another hedge, and this would be for a spread that was significantly higher than 1575. I was able to get into a bear spread at the 1630-1640 range at about 10:34 in the morning. A couple of hours later, the $22 spread trade that I had placed earlier in the morning executed, and so now that spread trade was closed. Now I was left with two open spread trades, the second one from the day before and the 1630-1640 bear spread that I entered into today. I was happy getting 22 out of a possible 25 on that spread trade because I didn't want to take the additional risk and I didn't have the time to watch the market the whole day. And you know, for my channel, I want to take as little risk as possible and not worry about my investments. The next few slides show the max profit, max loss. Things get a little more complicated as you layer in more and more trades. Please note that these slides are on a cumulative basis. I think it's more helpful that way, so please remember that. And pause the video if you need more time to kind of look at the details and the numbers. I won't go into too much detail in these slides. I'll go over the highlights or the unique things. For the first trade, that's pretty self-explanatory. For the second trade, the max loss is there for reference. If the trade did not go as planned and Tesla share price didn't continue to go up, I would have cut my losses short and exited the trade. I'm anticipating if it didn't go as planned, my max loss or my expected loss would be about $250 to $300. After the third trade, which is the second hedge trade, I'm no longer expecting to incur a loss on this trade. It would only happen if the share price ended between $15.25 and $15.50. And it's a narrow range, so I'm not expecting that to happen. Also, I'm already profitable at this point, so I'm not too worried. And as you can see, after completing the fourth trade, I am no longer at risk for incurring a loss. So what about the two open spreads? Should I close them out, you may be wondering, and I thought about it myself. For the 1630-1640 bear spread, I was contemplating closing it, but since I was already locked into a profit, I thought I'd just take the risk and see how Friday goes. As you know, I like to follow up on all open trades. This provides some accountability and is also a learning point for all of us. For the DraftKings open bull spread trade that I had completed on Monday, I closed it out on Thursday. You'll see that I made a profit of about $200 or over 100%. The max profit is $440 for this spread trade. However, that would require the share price to be above 37 by the end of tomorrow, its expiration. DraftKings is also reporting earnings tomorrow morning, so I didn't want to take that risk. As you may know, I had wanted to add to this position, but couldn't get my limit orders to execute. If I had more than one position, then I probably would have let one ride into earnings tomorrow. So now I no longer have any position in DraftKings, and I have the two open spreads on Tesla. I also just entered into a Spotify bull spread. Spotify hasn't really kept up with the market the last couple of weeks, but it's a quality company, and it could pop at any given moment. Also looking at next week's expiration for the 255 to 65 call spread, it's relatively cheap, so it's something I entered into. I may add to the position and I'll follow up on this trade in a later video. I'm also looking into a longer term options trade for Beyond Meat. I think it's a quality company, so I'll be looking to enter into either a leap or a diagonal. If I do so, I'll make sure to share it in the next video. Lastly, thank you for your time. I hope you found this useful and I tried to get it to you timely. If you liked the video, please hit the like button and subscribe. Thank you.